Markets trade near the day's high on the back of strong global cues. The Sensex and the Nifty all up almost 1% each as IT, auto and frontline bank stocks see buying mid-caps outperform.
Ola electrifies the street as Q1 losses narrow over Q4 and the top line grows 32% on a YY basis. Founder Bhavesh Agrawal says the auto segment is close to break-even at the EBITDA level. The company launches its e-motorcycle Roadster with deliveries lined up from Diwali 2025. The stock surges.
Hindustan Zinc skids as Vedanta launches the OFS at a 15% discount to Wednesday's closing price. Aurobindo falls close to 3% as one of the company's formulation manufacturing facilities gets a warning letter from the US FDA.
RHI Magnesita surges 11% after posting record high EBITDA margins. Glenmark Pharma rallies 5% on improvement in margins and profitability. Spicer under pressure on weak Q1 performance. The company's auditors say accumulated losses have entirely wiped out the company's net worth and doubts remain on company's ability to continue as a going concern.
Hello and welcome to Halftime Report. I'm Ekta Batra and with me Sonal Bhutra. Well, it's turning out to be a session which is in the green for us. So all of the indices that you can see on your screen are trading with gains. So we have the Nifty, which is up around 235 odd points. The mid-cap index, which is relatively better at this point, so up around 1.3%. And the Bank Nifty, which is up around 1% as well. So trading well at this point, the advance decline ratio in favor of the advances. A lot of stocks which are buzzing around, and that seems to be the theme of the day. Specific stocks seeing traction on the upside. Ola Electric, that stock is up around 18 odd percent. To give it get you some perspective, it's up around 40% plus in just the past week odd. So stellar listing which is coming for Ola Electric. Popular Vehicles, which is up around 6.5 odd percent. Sequence Scientific up around 5.8%. Good margins there. And Glenmark Pharma, where the commentary from the company was extremely positive post numbers, that stock up around 4 odd percent. So going strong for the markets at this point. No complaints, Sonal.
Oh, yes. And it's like the long weekend feels for the market as well, right? So it's a cheer all around. Of course, we did see that dip and that has been bought into and how. Markets are virtually at the day's high right now, led by the IT index and other names are contributing too. The mid-cap index, that one is doing really well. That's an outperformer, which is the advance decline ratio largely in favor of the advances. So around 1,700 stocks on the advancing side versus declines of around 700 stocks. We have the Nifty Realty, which is doing very well as well. So it's only Nifty Pharma, which is flattish today. We wouldn't say it's falling, but that's a sector which is falling a little bit. So a lot of stock-specific news that we are covering, and definitely DLF is one of them, and we will talk about it in greater detail. But let's focus on Cello World now. Q1 was a steady quarter for them, and management has maintained their revenue growth guidance of 15 to 17% in FY25. To discuss in detail about their Q1 performance and business outlook, Gaurav Rathod, the MD of Cello World, is joining us now. Mr. Rathod, good afternoon. Thank you so much for joining in. Well, it was a decent quarter and you have maintained your growth guidance. I wanted to understand, in this growth, have you factored in the soda lime glassware expansion that you're looking at? Also wanted to understand what is the total addressable market of this segment and will it be margin accretive for you from this year itself?
So yes, we have factored in the soda lime plant as well, which will start giving us revenue from the second half of the year. It will, of course, start giving us good revenues. It might not. It of course will be still positive in terms of EBITDA, though the depreciation in the first year will be slightly higher. But I think it will be offset by the revenue gains that we get, in an overall business scenario.
And what is that revenue addition that you're expecting and what is the total addressable market here? Because your peers are getting into the borosilicate glass market. So wanted to understand the differential here in terms of margins as well.
So I think margins are in line with our crockery, the opalware business that we currently do. And it's not borosilicate, it is soda lime glass, which is slightly different. This is mainly used for drinking glasses and other tableware items. And this market is actually much bigger than the borosilicate market. So currently in India, according to our estimates, it's about 2,000 odd crores, which is purely paid. So for us, it's import substitution more of. So I think for us, it's only a 10% market share gain that we are looking at through this capacity addition.
Okay. Gaurav, what happened to your writing instrument segment? It's around 17% of your total revenues. It was down 5% year on year. What led to that downtick, and what is the demand looking like?
So it has been actually for all stationery makers, more pen than stationery. Stationery still has done decently well because we are purely a pen manufacturer. So we have seen across the board that demand was a little tepid during this quarter. But we don't see this happening. July has been much better, and so has August been till now. So I guess it's picking up steam. Also for us, we are adding a lot of stationery items also in this particular segment. So going forward, we'll be much more diversified as a portfolio. So which would limit the risk as well of such a quarter.
So when you say diversified as a portfolio, are you going to look to expand as much as, say, the DOMS of the world?
We'll slowly get there. DOMS is a more diversified portfolio in the stationery and the art deco kind of portfolio. So I think slowly we'll be entering into categories that we feel have good margins and which have good potential for growth.
So you spoke about entering into products which will see better margins and good potential for growth. Your margins have been around the 25% mark. Is that something that you would maintain? And what is the product pipeline that you're seeing? In that 15 to 17%, have you taken into consideration the newer products as well which will come in?
Yes, so 15 to 17% covers our entire product portfolio. Mainly the glass plant is a completely new segment that we are entering. Apart from that, we keep coming out with newer product lines in our existing categories. So that will continue to happen. Of course, I think our margins have been steady, and I think that's something that we really pride ourselves in, and make sure that that doesn't come in at the expense. So revenue doesn't come in at the expense of margins. So that is why you've seen a slightly tepid growth this quarter, but going forward, I think when the festive season kicks in, things are looking much better.
Okay, all right. The other segment which looked interesting was actually your molded furniture and allied products segment. It was up 16% year on year. Tell us, what exactly does it comprise of? What were the margins that you recorded within this segment vis-a-vis what you did same time last year, and what's driving growth there? And are you expecting this kind of double-digit growth to continue, considering that that's been the key driver this quarter?
So this quarter, though it's a small percentage of our entire revenue, but this quarter, we also do coolers in this segment, and this was a fantastic season for coolers. As you know, the heat wave was pretty strong throughout India, so driven primarily by coolers, and of course, furniture also did decently well. Though our long-term perspective on this is going to be a little more in the single to just in the early teens kind of growth that we look at over the year.
Mr. Rathod, I wanted to understand what is the ad spends as a percentage of sales right now. The last numbers that I have, it's around 1.3% for you, but that compares with peers like Borosil at 7.7%, La Opala at 3%. I wanted to understand if you'll scale that higher because your distribution network is also quite strong. So what does that do to this number and your market share as well? What is it currently? How do you grow that?
So I think for us as a strategy, we are going to be spending about 3% of revenue over this year, and would probably continue to do that over the next 2 to 3 years. So at the scale of business that we are, that gives us a good amount of money to kind of spend on ads and other marketing activities. So I think it's important, and we realize that though we've always spent over many years and over decades to build a brand like this, but of course for the recall value, we will continue to spend.
And the market share, what is that number?
Market share for us is a very difficult segment actually, because it is so fragmented. So across our different businesses, it's different. So it's a very difficult to gauge that, because there's a lot of unorganized competition as well within a lot of our plastic and houseware categories. But approximately, it's about 10 to 12% of the overall houseware category.
Okay, this 737 crores that you raised via QIP, have the funds been deployed? What is the plan in terms of deployment, if not?
So the loan that was on the books has been paid back. So I think that's pretty much done. And of course, we are setting up a new facility for our plastic houseware and steelware products. So that deployment will happen over a year's time, year's frame. So I think pretty much that was the reason for the QIP in the first place. And I think we are on target to deploying all the funds within the next 8 to 12 months.
Okay. All right, Gaurav, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Cello World. That stock is at around 889 odd rupees. We need to take a short break, but up next we have an interesting conversation. Everstone's MD Arjun Oberoi and Head Private Equity India Pancham Mukim will join in to discuss their PE investments in the healthcare space and the overall environment. Stay tuned. Welcome back. Well, Everstone Capital is a homegrown domestic private equity firm with a presence in Southeast Asia as well. Over the past 7 years, the firm, which has around 80% of its investments in IT and healthcare, has made investments of $1.3 billion in various healthcare companies. To talk more about its investments, the current environment, we have with us the company's MD, Arjun Oberoi, and Head Private Equity India, Pancham Mukim. Arjun as well as Pancham, welcome to the show. Well, Pancham, let's start this conversation with you. You've invested around $1.3 billion in various healthcare companies. None of them are listed and none of them have seen, an IPO route till now, but very different investment routes. For example, one has been within the hospital space, and then we have others which are in the medical technology space. Give us a sense in terms of the key themes that Everstone is picking out when it comes to its healthcare investments.
Sure. Thanks, Ekta. Firstly, when we speak of healthcare, these are multiple segments within a segment. We have hospitals, we have diagnostics, we have pharma, and we have med devices, and then we also have nutraceuticals. And over the last 7 years, we've invested a lot of money behind multiple of these themes, right? So, and we've pretty much played every node of what we call healthcare. We've invested in a hospital business called Yatharth Hospitals. That was a big theme we have been playing. We continue to be bullish on the multi-speciality healthcare services space, given the macro is extremely favorable in the hospital industry right now. And as you've seen, the performance, even in the public markets for some of these businesses has been superlative. We've also invested in the what we call the India-US corridor, where we've bought into generic manufacturing businesses and R&D businesses with low-cost manufacturing, strong R&D and complex generic development skills, exporting products out of India into the US and European markets. We played med devices with two of our investments in Translumina and Everlife. And we've also played nutraceuticals in an investment we made in a nutra-ingredient manufacturer called OmniActive. So very diverse spectrum of investments and a lot of capital deployed behind these themes. In fact, close to 45% of our last two funds have been deployed in healthcare. We haven't taken any of these businesses public. Public markets have sort of have been very, very robust over the last couple of years. But we've generally sold most of our businesses to other private equity firms and sometimes to strategics. However, having said that, we are sort of evaluating taking a couple of our portfolio positions right now to the public markets, but we'll see where that goes over the next 12 months. Something that we are working on right now.
Okay, let's get in Arjun Oberoi in the conversation as well. Arjun, as Pancham was just mentioning, that hospital space, the macros are looking really good, and you're invested across segments or verticals in the healthcare segment. What is it that is looking interesting right now? Anything apart from the themes that Pancham just spoke about that could be in the pipeline going forward for Everstone?
Yeah, look, I think the way we look at investments is the biggest issue in India and Southeast Asia is addressing infrastructure and access gaps to affordable quality healthcare. So we continue to really like the specialty, the tertiary and quaternary multi-specialty hospital space. But then again, we're also serving in the US and Europe. We're also addressing the high cost of healthcare issue, which is why CDMOs, contract development and manufacturing organizations that have specialized capabilities, either in API synthesis or in formulations. So rather than looking at bog standard oral solid dose formulation companies, of which there are a dime a dozen, we are very selective about specialized capabilities that India has to serve the US and Western markets, which is why many of the themes that we have invested in the last 6 or 7 years continue to be relevant. In India, it's largely a service play around multi-specialty hospitals, as Pancham said, and the cross-border thesis is really leveraging India's capabilities in R&D and manufacturing, specialized capabilities to serve the US pharma nutraceutical markets. One theme that has become very apparent to us also in the past decade is the emergence of the medical device sector in India. I would say a decade ago, there were very few companies of scale and quality, and much of the medical devices were imported from the US, Europe, Japan, and China. Today, a thriving medical device industry has emerged, and we have been very much at the forefront of this. Two of our largest investments in Fund 3 have been in the medtech sector, one covering clinical diagnostics and life sciences, a company called Everlife, which has now emerged as the leading laboratory solutions business across India and Southeast Asia. And the other one, a business called Translumina, which has emerged as India's leading cardiovascular stent and devices company.
Okay, Arjun,
And by the way,
I just
on the
wanted to
public
narrow.
market story, we're thinking quite seriously about an IPO possibility for both of these assets.
Okay, Arjun, I just wanted to quickly narrow down on the hospital space because you said that you're quite interested. You have investments in Sahyadri hospitals as well. One, is there any kind of slowdown in terms of the private equity interest simply because there is this concern with regards to regulation of rates from the Supreme Court, which is still pending as an issue and could be an overhang? And two, are there as many assets available in the hospital space as much as they were, say, in 2023 and 2022?
I think it's probably best if Pancham takes this one.
Okay, sure. Pancham, over to you.
Thanks, Arjun. Look, I think there is some overhang on price controls, etc. But as we look through assets, one important theme for us has been to buy into workhorse models, right? That provides access to all. Sahyadri was an example of one such investment, right? So as we evaluate assets, we see where pricing is versus where market is, right? So. And that can be across different specialities. There is that overhang, but our view right now is that doing something of what is being propagated around would kill private investment in the sector, right? So there will be rationality because there is criticality of the private sector to continue to play its role, especially investments going out to build capacity in tier 2, tier 3 markets, right? So unlikely, that gets hit, and we've seen the government being very rational in terms of implementing various social security schemes across the healthcare space as well. As far as the question around availability of assets, you're right. This is a space that is consolidating, and that is driven by the need for underlying real estate, right? And greenfields take a lot of time to build out. Or inorganic has been a way to play for most of the chains, especially the ones now that are listed at reasonably robust multiples. This is the way to also fuel growth. So having said that, there are a lot of regional chains around that continue to do well and scale, and our focus will be around that similar to what it was with Yatharth Hospitals, which was the regional chain in Pune and Nasik. And we continue to focus on regional markets and are very catchment focused as we evaluate businesses.
All right. Well, quickly, Arjun, just wanted your thoughts on the medical devices space. You did mention that two of your biggest investments or two of your recent investments are within that space, could go down the IPO route. We still import majority of our medical devices as a country, around 60, 70 odd %. And that's more for the high-end medical devices. Do you think that trend is now changing? This is the next leg of growth that India could probably expect, and private equity is looking at more formidably, not only the lower-end medical devices, but maybe even high-end coming into India or indigenous manufacturing of high-end within the country?
Yeah, absolutely. We spent a huge amount of time looking at this sector over the past decade. In my previous, I used to head healthcare for Actis before I joined Everstone, where China was a significant portion of what we did. And if you look at the Chinese medical device ecosystem, they, I would say, are probably 20 years ahead of India. Right, and a lot of the import, substitution and local incentives to manufacture 25, 30 years ago have resulted in huge Chinese medtech companies across clinical diagnostics, cardiology, wound care, orthopedics, hospital consumables, etc. While India had focused largely on its homegrown pharmaceutical and domestic sectors. So, the focus, I think, has really shifted in the past 10 years. We got in very early, 6, 7 years ago, as we started to profile all of the medtech subsectors within the country and looking at the capabilities at hand. And you've seen with the emergence of several companies, a burgeoning ecosystem in India today, which is attracting a lot of private equity interest. Within cardiology, a few companies, sizable companies have already emerged. I mentioned Translumina, our portfolio company, which has become the market leader now domestically in this space. But you also have companies scaling up in many other subsectors, including wound care, orthopedics, hospital consumables, vascular access, and sectors such as this. So I imagine in the next 5 to 10 years, this will become one of the hottest sectors for private equity investment. And we've already seen this with the recent acquisition of Healthium by KKR.
Okay, all right. Arjun and Pancham, thank you so much for joining us today with those insights. It was a pleasure speaking with the two of you. But with that, we'll have to wrap on this interesting discussion and take a short break. We'll come back with more news and updates on the other side. Stay tuned for that. Welcome back. You're still tuned into Halftime Report. Let's talk about some stocks which are on our radar. DLF is one of them. It is gaining on the back of a positive brokerage note. That is coming from JP Morgan. The stock is high by 4%. The brokerage has gone ahead and increased the target price on the stock to 1,000 rupees. They have an overweight rating on the stock. They like the balance sheet strength and how it has been improving over the last couple of quarters. They believe DLF will surpass that $1 billion operating cash flow at group level in FY25. And this is because of the strong sales cycle that the company has been seeing and also because of compounding of free cash flow at its rental business. Remember, that business has been growing exponentially as well. They think that because of this, it could open the significant strategic flexibility at group level on acquisitions, and they see upside to pre-sales margins and cash flows in FY25. Now remember, in Q1 already, they have achieved 38% of their pre-sales guidance. The cash flows have improved by 100% on a YOY basis, and that is something which is making JP Morgan very bullish on the stock, and that's why that 4% uptick that we are seeing on the stock right now.
Okay, so that's on DLF. That stock up around 3.5%. Some source-based information on Yes Bank, so just to watch out for that. We'll take a short break, but up next we'll be talking to the management of Yatharth. That particular hospital came out with numbers. We'll discuss the performance on the other side. Welcome back. Still tuned into Halftime Report on CNBC TV18. Well, it's picked up a little bit of pace for the markets, so do watch out for that. In fact, the market's at the day's high. 24,444 is currently where the Nifty is at. We have the mid-cap index, which is also leading from the front, so it's up around 1.4%. And the Bank Nifty, which is really adding weight today, so up around 1.3% currently for the Bank Nifty. The advance decline ratio remains in the green terrain, so going strong in terms of the advances. When you're talking about specific stocks, there has to be IT, which has had a fabulous week. So Wipro is up 4% on a week-to-date basis. Techem is following suit with a gain of around 4.3%. LTI Mindtree as well has done well. Along with that, coupled with banks such as ICICI Bank, that stock is up around 2% at this point. Kotak is doing well, so up around 1.6%. So it's really IT as well as banks which are adding to a lot of strength today, along with obviously autos such as M&M and Tata Motors, which are doing well. But nonetheless, let's talk about one particular company. Yatharth Hospital posted what was a steady set of Q1 numbers, with its revenue up 37%, occupancy and average revenue per bed rising as well. To discuss this, we have with us Yatharth Tyagi, the whole-time director of the hospital, joining in. Yatharth, hi, welcome to the show. Well, if you could just start by giving us what led to, this growth of 9% that you saw in your average revenue per occupied bed this quarter. Is it because the surgical part, high-end surgical part, high-end services is now increasing as it has been for most hospitals? And that's what you're seeing as a trend for your hospital, which led to this 9% rise? And what is the trend as well?
Right, so the increase in the RPOP that you see here is primarily due to two aspects. One is the rise in oncology services. So oncology is something which we were offering earlier, but the full complete suite of oncology services is not there. So for example, radiation oncology and PET scan, as well as bone marrow transplants is something that we have recently started. So over the course of last 1 year, we see, where oncology used to contribute just 3% in terms of our overall revenue is now contributing to 10% of the overall revenue of the group. In fact, the Nord Extension Hospital, that's where we have the complete oncology suite. That's where oncology is now contributing 17%. So the increase in the average revenue per occupied bed is one, due to oncology. And second aspect is also the robotic surgeries. So we have 3 Da Vinci robots as well as 3 orthopedic robots. So this is something again that we have recently started, and an average robotic surgery costs more than the normal surgery. It's also good for the patients. Patients are now able to discharge much more faster from the hospital. The scar is much less and the recovery is much more. The recovery time is quicker. So robotic surgery is again one of the reasons you see an increase in the RPOP. So oncology and robotic surgery are the key drivers. And also going forward, we feel as these share increases much more in our overall pie, RPOP is bound to increase in the similar trend going forward.
What is the trend that you're looking at? Your RPOP has improved to levels of 30,550 right now versus levels of around 29,000 earlier. What is the year-end target in terms of guidance? And oncology from current 10%, how much can you scale it up to by end of this year? And what is the plan, longer-term plan for oncology?
See, oncology is a huge market. In India specifically, if you see the last few years, the cases of cancer have been steadily rising. We feel in Delhi NCR, there's still much more advancement that is yet to be there in the field of oncology. T-cell therapy, leukemia, as well as bone marrow transplant. These are specialized areas where much more needs to be done. So we feel going forward, we expect to see similar increasing trend in our oncology. So 10% now, yes, we feel that, as I mentioned, the hospital which has the radiation line has 17% oncology. We feel that in this hospital going forward, oncology can even touch 25% in a couple of years' time. As far as RPOP is concerned, we have grown around 10% from last year. We do expect to be growing on the similar trend in the coming year also.
Okay, so you're expecting this 9-10% growth in RPOPs to continue in the coming quarters?
I think year on year, 10% would be a good number.
For FY25 as a whole?
No, 10% as a whole, year on year.
Okay, all right. Occupancy, that's at 61%. Do you expect that to rise? The reason I ask is that oncology also has a lot of daycare services. So while you might be making money, from oncology services, it might not reflect in your occupancies. So when it comes to occupancies, what are you guiding for?
See, if you look at our occupancy, it has also grown significantly. Last year, it was close to 51%, and now we are close to 61%. So not just oncology, the reason for the rise in our occupancy is because certain other services like neurosurgery, cardiology, these have also seen significant growth. And two of our hospitals, I would still say, are still in a maturing phase. They're still not mature hospitals, so occupancy is bound to grow there. So as we see the increase in the OPD and IPD volumes, specifically, because we've seen good increase in IPD volumes. So we feel going forward, occupancy would be steady, but it would still continue to rise.
So what's your target occupancy?
I think overall at group level, I think in a couple of years' time, 70% would be a good occupancy level.
All right. Yatharth, how much of the contribution came in from international patients this time around? You have said you've expanded the transplant program. There is radiation oncology program. How much was it right now? How much can this be improved because of these new segments?
See, the two of our hospitals are located in Greater Noida, and Noida. So Jewar Airport, the Asia's largest international airport, is supposed to start this year. And first international flight is supposed to start this year itself. So we feel in this regional areas that we are present in, we will be bound to significantly benefit from the new airport that is coming. Even our new hospital, Faridabad, it's not that far from the upcoming international airport. So we feel going forward, this whole city, this whole area is going to boom up as far as medical tourism is concerned. More ecosystem is being created for handling international patients. This is something again where we have already taken certain steps. There's new teams of international marketing that have joined. We are signing MOUs with different countries, different outstation OPDs. Our doctors are now regularly going to CSF countries, African countries, conducting OPDs there. So we are quite confident that in the coming years, international patients should be touching close to double-digit contribution in terms of our overall revenues are concerned.
Okay, all right, Yatharth, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the view coming in from Yatharth Hospitals. That stock has done well, up around 3.5%. We'll take a short break. Up next, lots more stocks lined up. Stay tuned. Welcome back. Well, let's talk about Glenmark now. That particular stock is in focus because it came out with what was a good set of numbers. It came out, it reacted to its set of numbers today. Besides that, it also held its conference call at 8:30 a.m. and the commentary was positive along with the numbers, which were quite steady. Revenue was up around 7 to 8%, margins at 18%. Now, in terms of the call, the company has said that they have a net cash of 359 crores on their books. They've guided for 19% margins going forward. Key drivers include the India business, the Ryaltris drug, respiratory products, lower R&D expenses. They expect India to grow quite well. It was up 11.5% in the previous quarter. They're expecting 10 to 15% growth in FY25. According to them, the US remains challenging. Second half will see recovery in the US. They're looking for partnerships in certain molecules such as 1342, which is under development for them. Now, additionally, they have a meeting with the US FDA in September on their Monroe facility, which has been under the regulatory scanner. They've completed remediation for their Goa plant. Now, for Glenmark on the call, interestingly, they said that the focus on the Baddi facility, which is also under the regulatory scanner, has reduced for Glenmark. Now, US is around 24% of their sales. Interestingly, Glenn Saldana pointed out that Europe could be as big as US by the end of this year. So Europe could be a huge generator in terms of sales for Glenmark going forward, and the importance for the US could probably reduce comparatively. Now, Ryaltris, which is basically their respiratory drug, they've launched it in multiple markets, made around $20 million this quarter. They're expecting $80 million in FY25 from this drug. Liraglutide, which is basically a GLP-1 drug, a weight loss drug, diabetes drug, has seen a good offtake in India. Well, on that note, we'll take a short break, but more on the markets, lots of stocks on the other side.
Welcome back. Well, markets picking up pace. The Nifty is sitting with gains of almost 300 points. Remember, we did see that dip around 10:30, and now that has been completely bought into. 223 points recovery from the lows. Mid caps are powering through as well. That index is up 1.5% right now. Very strong advance decline ratio in favor of the advances right now. Couple of stocks that I would like to point out, which are at the day's high right now and contributing to the gains that we are seeing on the Nifty as well. HDFC Bank, that is the one which is at the day's high right now. That stock is up 1.3%. It did underperform a little bit last week, but it has made a comeback. GAIL is the other one. A lot of these stocks from the oil and gas space are making a comeback. Nestle from the consumption space is also at the day's high right now. We have Dabur, that also from the consumption space is doing well. Some of these banks, ICICI Bank, SBI, all of them are doing well, and of course that is something which is supporting the Nifty at those high levels as well. 24,400, that's where the Nifty is currently at. But with that, we'll wrap on halftime report for today, but Business Lunch will take all the action ahead. You have a great weekend.